Hello guys, glad to have you on board again. Today we'll cover up as usual the cryptocurrency markets and the global asset review, in which we're going to cover up commodities, forex, bond market, volatility market, derivatives, anything like that, stock market, stocks themselves. So probably as usual a show that is going to last for half an hour approximately. And we'll try to do as ASAP, as I'm the chatty kind of guy, as you know already. So be prepared. That show is going to last approximately a half an hour plus me answering your questions at the end, which generally extend those shows to sometimes an hour. But probably less than that today. So let's get things started with the Bitcoin. So we're going to switch back to 2-hour chart time frame, and we're simply following on from the scenarios we've been previously showing yesterday. So not a lot have been changing. We still have a few new technicals right now in the 2-hour chart time frame. What we have, so first we have a look at the daily chart, see if we have anything new. Not that big of a deal. We still have sine wave in the potential bullish reversal zone with a momentum in contraction inside a potential triangle structure. So we'll see how how it goes. Yes, that's what I wanted to say. Now we have the trade line emerging from the reversal zone, which means we have a very tiny bullish sentiment that might be emerging right now to confirm that triangle. So as long as this lasts, I think this is good for us. Second option is, as I think we are in a big, so that's what I call the washing machine. It's a pattern basically in which it's not the perfect kind in here of that pattern. But generally, this is a narrow price channel in which the prices are oscillating with a momentum that never ever managed to break up zero value. So as you can see, we slightly broke it up right here, which suggests we might not necessarily be into that pattern, but could be anyway. So I'd like to share that with you, and that would be today's educational content. So the washing machine pattern is something like that, a market that never ever breaks a resistance, basically falling apart by steps. Okay, it's a step market, things like that in a narrow channel. So to be perfectly respected, this is what we should have had. I mean, the market would have kept on going inside that this channel, for example. This would have been a perfect washing machine pattern. So when you are in this, it means the market is going to break all the supports in the row until it gets to break up the momentum to above zero value. I mean, whenever you have that pattern, you just got to sell the momentum anytime it gets to zero value. And whenever it holds positive value and exits the channel, you know that you need to exit and go to the opposite side. And generally, after that pattern, you have the exact opposite coming right after, but with less dynamic, which means you generally push the price downward, 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 down. Then you exit the trend channel and you create a tiny trend channel on the opposite side, and you grind your way higher, not making new highs generally, and it's generally reaching out to 61 to 76.4% retracement of the first bearish washing machine. And that's the worst case scenario, because this is a sign of a market that doesn't really know where to go. It's neither bullish or bearish, and that suggests absolutely a lost market. So if we went down to have that kind of pattern, that would mean that we don't really know what to do with the cryptocurrency market at the time, and that wouldn't necessarily be a good thing. So anyway, in the daily chart, these are the only technicals we have right now. We're searching for bullish entries. We're in the bullish reversal area, but we're still in a bearish oscillation in terms of momentum, which means sine waves and momentum not giving the same scenarios, not the same odds. So really being cautious right here, can still go slightly lower, but I think the outcome could be slightly more bullish than bearish, even though I have not a big of a confidence in here. So in 2-hour chart time frame, we'll have a look at eventual new technicals. So if you're just following here, we just triggered a bearish pattern on momentum, still following on right now, as this is the highest points, hasn't been invalidated yet. I mean, the sine wave, the momentum pattern here is still validated, as the momentum hasn't managed to go making new highs to invalidate that pattern. So still bearish on momentum, even though the price keeps on pushing higher. So we've got contradiction between price and momentum. Also contradiction regarding sine wave, who was in a bearish cycle, triggered a bearish confirmation in here, but we made new lows, not new lows with the momentum, and then we went to break up that pattern. So sine wave giving us the target up here, which was the best case scenario to me, and then we try to break it, fail it, and now sine wave is back in here as a resistance. So we've got two options. It's either we break up again, and this will probably trigger a bullish breakout in that this time. So that could be a good sign for us. Having a bullish breakout in here really means that we have tiny odds to get back there once again. Otherwise, what we have in here is a double bearish sine wave and bearish momentum. The worst case scenario will be to have a red triangle. And if that was to happen, I think that will be 3 signs to get into returning to bearish sides. But as you can see right now, sine wave is not detecting any kind of price action, confirming a bearish price action. So basically really being patient right now. If you sum up all the informations we've been talking about, it's basically a 50-50 kind of scenario. Either we have some bullish information, some bearish ones, all confronted to each other, doesn't necessarily give a consensus out here, which means playing range or not trading is the only solution you have right now. So if you do use the range strategy, what you'll do is picking the last resistance toward the last potential support we have right here. You just put your usual range scenario, Fibonacci level, and you'll see that we're right into the DOM zone. So you don't really trade in here. I mean, the DOM zone will be right here and not really interesting. So I strongly think actually that I just figured it out right now, but that might be the most rational choice to make right now, to just put a range strategy at play. So really, I'm going to switch from what I've been saying yesterday. I think the most reliable thing to do right now is just not to trade in the DOM zone and waiting to see price. I'm going to give you 2 options later on. So you can put a black box in here. That would be the best case scenario, okay? And so you don't give a shit about what's happening in there. It's either we exit by the downside and then you flush it away, and if for some reasons we get to the blue area once again, that means bearish, okay? It means that if we enter the DOM zone, get back in again, and breaking down the blue area means that this is where you want to trigger your stop losses and go bearish, means the trend is bearish and the range scenario is not respected. Otherwise, we get to exit by the top of the blue of the DOM zone, and then we'll search for the red area, which I've been putting my validation levels and the levels I'd like to see traded somehow later on. So this will be my new scenario. Same thing goes for the Ethereum and IOTA. I've been buying the 3 during the weekend with very tiny leverage, highly speculative. And once again, if the Bitcoin is invalidating, I will invalidate the whole package and sell them once again, just to buy later at better prices. That's it. Now moving on from the cryptocurrency market to the general asset review, we're going to have a look at the economic calendar right now. So we've got not that big of a deal today. We've got conference board, consumers' confidence might be a catalyst today, but I think not that big of a deal. Could be a bullish catalyst to the U.S. equities if for some reasons this was to be a better release than the expectations. So if for some reason we have a very bullish consumers' confidence release, I mean something much better than the consensus. For example, if we had 129 or 130, that will be really something that the stock market could use to rally and erase yesterday's losses, for example. But I think that's not going to be a catalyst, despite we have something that really overshoot the consensus. So not that big of a deal today in terms of catalysts. So we'll see how it goes. Yesterday was a pretty bearish day, but as you can see right now, we've got nothing like close to this. I mean, the equities are just basically retracing worldwide, and we'll see how this plays out. So what really bothers me right now, not really bothering me, but this is what I wanted to say. I told you about really being cautious near the 17 area in the VIX. And yesterday we just flushed that out, no questions asked. We went there and broke it up. Not even a volatility seller at play yesterday, so that was great to see this. And now next resistance is near 21, which is the initial level. The manipulation got targeted, got triggered, and this is the price I think we have to return to. Consider that as returning to the mean in terms of value, and I think this is where we'll have to go. If you put that equivalent in terms of S&P 500, this is pricings we had back in mid-May or 10th of May. So if we get back to the SPX and going back to May the 10th, sorry, no, it was April the 10th. So it is basically going back there near the open price of 2018. So I strongly think that this is where we're going, which means we'll still have some room to go. We also have that on the VIX. So I see some room in the VIX, I see some room in the SPX. We'll see how this plays out. So I have multiple options. Either we keep on going down today or tomorrow, and eventually today we just build a range in here, not breaking resistances, not breaking support, and probably tomorrow we can make another minus 2% day. Probably tomorrow or after tomorrow, and we'll see how this plays out. But I think during that week we need to get there to that technical cluster in which we have a support, and I would really like to see this one broken down. That will really be a sign of bearish strength, and then when we get there, I trigger some partial profit taking to temporarily get out of the market, letting the market pulling back. So I'm not buying anything in there. I'm just going to let the market pull back to get to double it down in here if we do that. Probably what I'll try to figure out, what I'll try to target is this, a pullback out of this potential trend channel, and that will be the perfect scenario to enter back in. So we'll see about that. We can have a pullback today, and in that case, we'll just build up what we call a leading diagonal. So that wouldn't be the worst case scenario, even if we pull back deeply back to 2770. We can go there and still remain bearish. I think at that point, my stop losses are there, and I think the market cannot chase them down. So we'll see about that. But even if we get there, I'll get to sell again to have a final bearish impulse. Okay, but if we're in the leading diagonal, wave 4 has to be entering into wave 1 territory, and the wave 1 hasn't put a lot of resistances. So we've got resistance in here. And generally, wave 4 is reaching out to the wave 1 supports and resistances. So it's either the wave 4 is really tiny and getting there. It's the only level we've been triggering in here. And I hardly see that happening, but I see that much more probable. In here, you see the wave 1, this is where we had big support area, and then it turned out to be a resistance. So I really see the market being able to do this today. So if you see Wall Street picking up today for some reasons, eventually a bullish consumer's confidence, for example, or something like that, don't be afraid. I mean, if Wall Street's raising yesterday's session, doesn't mean Wall Street's bullish either. Now that the VIX has been breaking resistances, I think nasty things are down the road. At least volatility sellers are no longer at play. And if they are no longer at play, I think selling resistances is the only choice to do right now. So bearish on Wall Street right now, but might having a lot of pullbacks in between. So don't be fooled. If the market is retracing, don't expect the kind of V-bottom structure and buy the dip, whatever. I think we're just going to get back to resistances and sell them once again. So to me, everything is about that today. If this thing fall apart, no problem. If I see struggling in Wall Street to get lower today, I'll probably trigger 50% taking profit just to double down on selling that area again. That's it. Now moving on to the bond market. Okay, so in the bond market, this is the German 10-year, so the bonds. I've been buying this, selling the bonds, but the bonds are opposite moving from the yields. So yields are going up, means the bonds are going down, means I'm taking gains in those assets. Perfectly reacted in the blue area, not having a bullish signal in here, but we've got a beautiful divergence. So I can consider that valid, but we need to break that resistance to confirm that. So it's still too early to consider that trade as out of risk. So we might still be working around that price area for a while. And what I'd like to see then is to get the price into validation. And validation to me right now is just breaking the resistance will be more than enough to consider that divergence valid. We had the squeezing pattern right here, which means I don't really take care about the bearish signal we have right now. It's more like the momentum has been bursting up, and we'll see if it keeps on going that way to consider validating that trade. Regarding the US Treasuries, still heading to the downside as I think it was, and so we clearly finished the wave 2 in here, and we're back at work to an extended wave 5 kind of 3. So third wave is supposed to be our extended wave, so you can have a clear sub-wave count in here, and I think this is what we're currently doing. Wave 1, 2, 3, 4, overlapping wave 1, heading toward wave 5, which means we could have very, very bearish yields. Bearish yields mean bullish bonds, mean the equity market might be at risk today once again, and the bonds could be ready to trigger the bearish scenario. So we'll see about that, but there is interesting room in the US bond market. So I'm not, as I said, I'd rather like to take gains on the equities instead of the bond market when it's relating to going to the downside. Because generally, if we see risk in the risky assets, and if money is moving out of risk area to safer areas, generally doing the buying safer areas is far less rewarding than selling the risky assets. So as I like risk, okay, I'd like to take more risk to get more gains. This is why I rather like to short the equities instead of buying bonds. But you can choose to between those two. I mean, if you're a low risk profile, then eventually buying bonds might be a better choice than just getting into selling the equities. That's it. Moving on to other assets. We got the gold. Really strengthening happening right now with the gold. Gold is breaking down. So what the hell? As you can see, we've got pretty lot of room in the US Treasuries. We've got a bullish yen, and what the heck is going on with gold? Gold is supposed to go up, and we'll still have double bearish signals plotting one against each other, one after the other. I mean, I never thought this would be a true bearish breakout, but yet it was. I never thought this pattern would terminate, yet it is. What the fuck is going on? Really, I don't really have other words to say it out loud. But really, I think this is going all wrong. So it sounds like a manipulation market to me, just as the VIX. So we could have manipulations on the gold, because I don't see any reason for the gold not to go up right now. And the dollar was bearish yesterday, so it was open doors for the gold to break resistances, and it hasn't. It means that we have something not really normal at play in here. We do have volume, so it could have been just no volume, not interesting prices for the traders. It's not the case. We have volume, so I don't really get the point in here. So when I don't get the point and I don't see the logic, not knowing the market isn't necessarily logic, but at that point it's been illogical for such an extended period of time. We didn't have to go that low on the gold. I still think we were bullish in that asset, but I think all of this is just pure manipulation to get people into remaining into risky areas. But if somehow the bullish sentiment were to change, I think at some point gold is going to be heavily bought because it can produce very, very big rewards. So as for now, this scenario remains speculative. It's still I'm maximum leverage right now. I can't put any more reinforcements. So I just basically wait to have an exit kind of signal in here or taking profit, and I need to wait to have bullish signals validated or bearish signals invalidated to get into confirming that scenario. As right now, it's just a falling knife, and buying this might be the worst ever thing you could do. I mean, if that market is manipulated, if for some reason they want to break that low, they still have plenty of room to go ahead, and fighting a manipulated market is the worst thing you could ever do. Yet I have a bullish sentiment, no questions asked, but if the market is telling me to do otherwise, I won't trade bearish, as I have a bullish sentiment, but I cannot trade against the against the market. Not going to fight it. If for some reasons the gold were to go bearish, even if the equities are going bearish as well, I'll just let it go and wait for the pattern to terminate. I mean, manipulating a market is a pattern. It's something that goes parabolic, because the more you want to manipulate the market, the once you go ahead with the manipulations, the more expensive it gets to manipulate supports and resistance breakup and breakdowns. And at that point, you get into the no return point in which the manipulations is way too expensive and too risky, and it just terminates itself, and then the price returns to the mean. So returning to the mean in terms of gold is going there, and this is the reason why I think for some reason at some point it's not going to work out. And as you can see, we're going to probably go there, grinding our way up just because the manipulation is not going to work well, and at some point going to flush up, return to the mean, and get to the opposite reaction. That will lead us to the target. So we might not get that high actually, as the manipulation might lower the expectations in terms of targets. But right now I still remain bullish on the gold, but it needs to be remaining low leverage and highly speculative, as we're probably fighting a manipulation, and it's either just an excessive market we have right now or a manipulated market. And I think if this is the second option, they might want to trigger the stop losses, and they probably will get down here. So giving away those stop losses might be the only option in here, and you don't want to give them a lot of money. Okay, I don't care being stopped out if I do trade against a manipulated market. What I care about is not giving them too much money, but taking them much more when they will be over with that manipulation, and when I will trade against them. Just like I've done with the VIX. I mean, in VIX, I've been taking losses for the last couple months, as they've been selling volatility each and every time. I just took it over 3 times yesterday. Okay, and we're still not yet at the target. When I get there, I'll take much more gains than the tiny losses they've been picking out of me during their manipulations. And that's all I care about. I mean, manipulated market is not, I'm not fighting against it. All I do is taking advantage of this, and whenever I have the advantage. Okay, and right now I have the advantage, but it might not be the case into the gold scenario. Even though this is totally abnormal, when things are abnormal, you don't want to fight those. It means 2 options: either it's going to brutally reverse, or it's a manipulated market. And for now, I still don't know what this is about. I mean, either we're going to get a very brutal reversal in here, but from what I can see right now, I've got no signs of this. So it's either the mentality is going to switch, or we're just in a manipulated market. And I have preferences right now for the second options, but I'm not quite sure. I'd like to see this happening. We've got a final support in here. If this one is broken down for some reason, I think this will be too much, more than necessary information that this market is under heavy manipulation, just like in the VIX. And for some reasons, it's still always the same kind of manipulation, always leading people to buy equities. So it might not be a good sign in the end. If after manipulating the VIX, we have people manipulating the gold, what the hell are they going to do afterwards? Manipulating the yen or whatever. I mean, at some point, it's going to cost a lot manipulating those markets just to hold on with the equities. I mean, at some point, we're just going to let the equities go down and being fucked up with those who've been selling the gold. So being patient right now and see if and watch out, okay? Regarding the forex market, EURJPY, strong confidence for me in here. I still wait to see that pattern triggering with a new bearish impulse. Euro dollar, I don't give a shit. GBP USD is consolidating in a triangle, potential triangle, so waiting for now to see that pattern terminating. So nothing to do right now in terms of GBP USD other than waiting to get this validated, and the next wave is going to be interesting to me. What next? AUDNZD, pretty nice bullish reversal today. We're creating a pattern in here, so I've got a great scenario. I'm going to share that into TradingView today, so you get the chart with this one. I think we're building a pattern really not showing this very often. It's the barrier triangle, and what we have right now is a perfect one with a BD point rejecting probably in the same direction. So expect today the AUDNZD to probably stop in here. So it's not necessarily going to be the case, but if it is, then this is a barrier triangle. And if you simply respect Elliott wave forecasting, it says that whenever you have a barrier triangle at play, the wave that is following is either going to be very sharp and rapid and tiny in terms of amplitude. Whenever that pattern triggers on wave 4, generally that's the case, means the wave 5 is going to be very tiny one. Or when it's triggering in wave 2, in subwave count number 2, generally it means the subwave 3 following on will be the extended wave. So we already know that we're probably going to have a third master extended wave, in which we're probably going to have a subwave 3 extended as well. So waiting for now is the only option in the AUDNZD, but probably I think building that scenario. So waiting for one more pullback in here, waiting for the E point to validate, and the next time we get to the neckline, it's going to be broken up and triggering to me one more leverage. So I'm leverage 6 right now. I'm going to go leverage 7 whenever we break that up, and maybe eventually leverage 8 if this is manageable at low risk, because I think this is where we'll get the biggest market move in terms of directions, and I think we get to have a wave 3 terminating in here, which gives us a very nice trend to be ongoing in the next following days or weeks in the AUDNZD. I mean that's pretty much it. Regarding stocks themselves, things have been doing pretty well yesterday. I've been sharing Netflix is at risk of a potential crashing market. So it's already at play and Netflix is going to work around that price area and then fall apart, or we're still in the early returning risk pattern that will get us to new high and then the crashing market. So it's really too soon to tell and too hard to trade right now. But to be setting things straight, we're right on a support area. If we make a second daily candle close below that support, I think that I will be triggering a breakout pattern, meaning entering in here, putting stop above the highs, getting to the downside. So we have a bearish gap in here to manage the risk, and this is a probable Iceland reversal pattern, means that we've been in there for 3 days, gapping it up and then gapping it down and closing at the low. This is Iceland reversal, which means you can handle your risk management right here. So that gives you better risk-reward ratios, but at that point, I'm so sorry I've been missing that trade. I would have liked to taken it right in the middle of the day, and at that point you would have been selling in here, paying for your stop loss at the end of the day, and just let go with the rest of that position. But right now, it's more like a cautious approach is necessary. So waiting in here to have confirmations today, or wait to have the market getting higher in the next following days. And then, but at that point, we're in the very late stage of a bubble. So anything going higher it has to be sold to me. So it's either we're already too late and already into the crashing market, and that will follow through in the next following days, or we make a new high, but the next market top, the next peak, is going to be the one that we need to sell. So at that point, all I know is that this is soon to come, if not already at play. The crashing market in Netflix is to come. That's basically it. NVIDIA, pretty fucking nice gains yesterday. Once again in here, nice bearish gap, so it's time to lower the stop losses. We've been validating the trade. So perfect scenario in here. I'm still waiting either to get to target number 1 or to fill the gap. As long as we remain here, I remain bearish. So I still see some bearish potential on all those assets, Netflix, NVIDIA, Apple, Tesla. All of those I think have some bearish gap, some bearish potential to be forthcoming today. So we'll see about that. Today is going to be an interesting session. Goodbye, guys. Sorry, I'm going to answer your questions. Okay, so to me, the Tether is just the biggest ever market shit I've ever seen. I mean, what the hell's going on with USDT? I mean, you've got USD. What the fuck is going on with USDT there? It's just nothing but a big Ponzi scheme. As long as there's a doubt about the really funding, real dollar funding of the tethers, what the fuck is going on? When you got dollar that is the exact same value of tethers, why the fuck would you take something that's at risk? Just take the dollar. I mean, I don't really get that, the thing with tether. If you're doing this, and just get out of that shit is risky, dollar isn't. So for the same value, what would you take a risky asset instead of a safer one? You do as you please, but once again, I give you my advice. Tether's just a big shit, and as a trader, that's something I would never ever have considered getting into. Okay, just a couple of days ago, as referred, and I've been seeing people testifying what the good has been doing for traders. Give it a shot, and just yesterday, my first payment. Okay, fuck you. You're not here to make your promotions. If you're selling things, just get the fuck out of here, okay? And you can be pleased I haven't spammed you out, okay? So nobody is going to be making promotions in here. I'm selling free content. So whoever the fuck is going to make you pay for this, just don't give them a cent. It's pure and simple. If you pay to learn into trading, just get the hell out, okay? There are lots of people sharing things for free, me included. So get there and fuck away all those who've been making you paying for informations. You never have to pay for informations, okay? It's really pure and simple, and I stand on this. I will never ever make you pay a cent for information. It's never going to happen. I'm not there to engage you and to somehow sell you some premium shit stuff in the next couple months to make you pay for informations or some VIP secret stuff for those who are paying. Not at all. It's always going to be free and forever. Knowledge, and as I stand on this, is either infinite pricing or zero, and I will never change my mind on this. Zero is the only pricing for information. Okay, so if you're paying to learn from someone, just get the hell out of here and don't pay that person a cent. Okay, the only thing you can pay with me is my indicators, and this is intellectual property. I've been working hard on this. It's not just information. I mean, this is actual indicator, actual algorithms. You're paying for something. You know what you're paying for, and moreover, you can test those things for free. So there's no trapping in here. If you want to test the indicators, you test them. If you like them, you pay. If you don't like them, you get away. But it's not going to cost you a cent at any point, okay? If you can just try for free. And this is the only thing that is going to be selling and sold with me. And that's not going to change tomorrow. I promise you on this. I'm not here to trap you in and they're making you pay for some silly stuff, okay? Always going to be for free and never going to change about that. What would you need to use Ethereum? From what I see, Ethereum basically burn volume doing nothing. It's just not volatile enough. Okay, I don't care. This is just how I feel it. I mean, EOS can be a choice as well. But from what I can see, I'm not interested right now. Okay, I feel like this is something the Chinese are trying to sell me, and as a trader perspective, I don't see value in here for now. I forecast eventually to be, but what I do, if that's the case, is basically balance my Ethereum EOS portfolio. To me, they have the same goal, but I see much more volume in the Ethereum than in the EOS, which means to me confidence gets to the volume, which means Ethereum first for me. If for some reasons EOS went to double down, to cross Ethereum, or at least getting into the same volume treated area, then at that point I'd consider eventually splitting the money I want to get into Ethereum and getting it halfway into EOS and Ethereum. But at some point right now, I'm still into Ethereum only, but that's something that could change in the future. But I need to have proof of EOS not being just the biggest bullshit the Chinese try to sell us. So EURJPY taking profit pattern cover 50% of the positions. We're still far from taking profit number one. I'll see here how this goes. I mean, once again, whenever I get to the actual level, I instantly take 25% off instantly, and then I'll see what the signals are. If for some reason it's just taking profit or whatever, and I have strong bearish confidence, I'll just stick to this. 25% will be more than enough. If for some reason I see some exit or even bullish scenarios, bullish signals, I'll probably get into taking 50% off. So it's a 25% layer necessary at the level, and eventually another 25% layer if the signals are suggesting a deeper pullback. So it will be just taking more off the market to get more in whenever we'll have retraced. Okay. Okay, US equity finally day of reckoning. Yes, not that big of a reckoning. As you can see, in order to, and as I said clearly, I want to see that market closing at the low, and for some reason we haven't managed to do it. Even though we've made a minus 2% day in the Nasdaq, and eventually at the worst part of the day, we were minus 3% down. But the market doesn't manage to close at the low, and that's something that we need to take consideration of. So it means that we're bearish, but not that bearish. And if the bulls are still in play, they might want to try focus up once again. So getting into reinforcements too soon really is the biggest mistake you could make. And really you have to get that. Today I haven't been taking reinforcements on my shorts in US equities because I think that will be rising the danger area, which would be the worst case scenario. So I think this is going to make you smile. Another hour to closing New York time if we close around it. Yes, but as you can see we haven't, and that's the point in here, and that's a problem. So we have to balance the feelings we have. Yes, the entire session was great, but the end and only the close matters, and the close is not that bearish, and that's not a good point. Maybe I forgot to talk about AUDNZD yesterday, but I covered it today, so you're good to go. And as I said, I will share the associated static graphic inside TradingView just after uploading that video. Yes, thank you. I think the content is biased somehow anyway, because I'm a trader, and a trader is always biased. But I think. Once again, and we said that in the psychological live room the last week. I mean, being biased is not a problem. It's just one of those bullshit you come across all over the web, which is telling you that you don't need to trade biased, you need to keep an open mind, whatever the shit this is. I mean, when you trade, you need to pick a side, and picking a side means you are going to be biased. But this is why you have a strategy to make that bias rational somehow. Okay, it's just that if you choose for some reasons to buy a market that is showing only red signals, then you have tiny blue signals. But if you trade out of those blue signals, you're getting into very dangerous areas. But normally, even if you're wrong in the end, means that you're trading in a bearish trend, trying to buy that market. Normally, if you follow the signals and if you follow the strategy, meaning you wait to have, you wait to be on a major support on your bigger time frame, and then you wait to have a technical framework that suggests you might have a reversal on the local time frame, and then you wait to have blue signals. Normally, you should be limiting the risk enough to get returns, even if you were on the opposite side of the trend. And of course, the better you get into timing, the less losses you will take when you're wrong. It's just about that. But you can be wrong and making gains. But that's something most of the traders out there are not telling you. They're just telling you that this is how it goes, this is simple, use your Ichimoku or just Elliott wave. This is not how it works. These guys are just telling you bullshit. I mean, real traders, we might have used different words, but we're all using the same strategy. We're taking care of the context, we're finding a technical framework to work with, and prices we want to trade, and we wait to have signals in those areas. It's just simple as that. And whenever you get that, you'll get what trading is about. It's not about Elliott wave. It's not about RSI being into the reversal areas or whatever shit most people can tell you about this. It's nothing like that. These are independent things into an overall strategy. RSI needs to be step 3, needs to be confirmed by another indicator, because the step 3 of a strategy requires 2 indicators non-correlated to signal together, and this can be RSI with something else. It must not be a stochastic or MACD, because these are correlated indications. But for example, as I said, you can just take sine wave, the pure original sine wave from John Ehlers, and you take the RSI, and you've got a strong couple to trade the signals. Of course, you're not going to get the patterns I have with my indicators, but nonetheless, it's still trading signals. If you work them out, if you learn yourself your own patterns, then you got a strong confidence. You also have got a signal, and that's only the goal. If that signal is occurring anywhere in price area, you just don't trade those signals. If those signals occurs right in the expected price area with a technical framework and a context that suggests you might be right, why the hell wouldn't you take that trade? Even if everyone is telling you that you're in the wrong side or whatever, you just don't give a shit about what other thinks. Even if you're biased, that's how it goes. Being biased, not a problem. Absolutely not. What's a problem instead is people who are changing their mind because of people biasing them. I mean, if someone is telling you, no, you shouldn't buy, and at some point you start to worry about your trade and saying, oh, that person might be right, so I might try to search for bearish signals right now. Guess what? This is the worst thing you could do. If you took a bullish trade, then look for bullish signals, okay? And until it doesn't get to invalidation, you need to be strongly confident to what you've done. Even if this is wrong in the end, if you've done it right, normally you should take a tiny loss, or eventually even a gain. And if you're right, you're going to take a much bigger gain than the loss you could take if you're wrong. I know I'm repeating this multiple times, but we really have to get that. This is what makes the difference between a fucking gambler and a trader. The gambler focuses on right, wrong, good, bad, fear losses and enjoy gains. That's not how it works. I mean, losses are part of the job. I don't really care when I take a loss. All I care is the next gain I make. That's how it is, and that's the mindset you need to put yourself into if you want to get a trader. Otherwise, you'll remain a gambler forever. I mean, gambling is not a problem, but it doesn't give you reliable long-term incomes. So if you expect to make trading a job, and I think most of you guys are here for that, I mean, gamblers can make nice gains and talk you to about limbo things or stupid shit like that for months. They're not going to last longer than that. I mean, gamblers at some point get into darker areas in which luck turns into bad luck, and when they have bad luck, they don't talk to you about it. They don't talk to you about it. You only hear about them when they're lucky, and this is why you think those guys are great. But believe me, they're not. They're just bullshitting you, and whenever they're wrong and whenever they're having bad lucky sessions, they're not talking to you about those sessions. And believe me, they're losing more than they've been gaining in the lucky sessions. So they're doing the opposite of me. I mean, I don't give a shit about losing. I know it's part of the job, and I don't try to hide it. When I'm wrong, I talk about it and talk it through. It's not a problem. It's not something I'm ashamed of. I have no problem with losses, and I have no problem talking about the gains. But I'm not the kind of person who will talk just about the gain and overextend euphoric gains and just trying to narrow losses as much as possible. It's not how it is. I mean, to me, they're equal part of a coin. They're just two faces. You cannot have one without the other. It's just that I'd like, whenever I flip the coin, that for some reason, if I get to the right face of the coin, it will worth $10, and if I get to the wrong face of the coin, it's going to cost me $2. And whenever I do this, I mean, no problem. You want to play 50-50 and throw the coin multiple times, no problems. If when I win I take 10, and when I lose I give you 2, well, as long as you want to play, I'm good to play. I know I'm going to win. Believe me, this is what I'm doing. This is my job. I know as much as I throw the coin, by respecting the strategy, and this is really important, this is where you and I are going to be different in the beginning, because I know how to respect my strategy to the letter. You don't necessarily know how to do it right now. You're going to make mistakes, and those mistakes are going to take some of the gains you might make. So this is why you might not necessarily be that big of a profitable trader in the beginning, because you need to master that thing, and it's going to take quite some time. But once you get that, you're really going to get into throwing coins, like I said. I mean, I don't hesitate much before getting into a trade. As long as I respected the strategy, I know that throwing that coin, even if it gets to release the $2 loss face of that coin, I don't give a shit. I'm not going to overthink things the next time I have an opportunity to flip that coin. Because statistically, in the end, it's 50-50, but if I get 10 when I lose 2, no problems. I'll throw it how many times you want. That's what we call the statistical advantage. When you get that, you're actually into trading, and that is what's going to give you long-term, reliable incomes at low risk. Of course, from time to time, you're going to have bad luck sessions in which you're going to take loss after loss after loss after loss. But guess what? There is also luck in trading, and sometimes you're going to get gain after gain after gain after gain. That's how it is. I mean, luck and bad luck is also part of trading. But that's what makes a difference between the trader and the gambler. The gambler is going to suffer a lot when it gets to bad luck, not the trader. Anyway, that being said, I think that's more than enough for today's session. So we consider that today educational content. So goodbye, guys, and see you tomorrow.